The best opportunities in the market exist in the continuation, and it's where I take the majority of my trades. So for this video, I'm going to be explaining the process that I followed to get on side with a continuation trade that I took this past week, and the same framework that you can replicate for yourself on any continuation trade that you take in the future. I'll be going through this process step by step as always, and including some extra lessons along the way. So let's get right into it. The first step to any continuation trade is establishing a point of reversal that will actually begin the continuation. And when I take a look at the charts here, obviously on the daily time frame, allowing Monday to print without me because that is part of my protocol, I can identify that the market is more in a range and a point of reversal has not yet been established that I can then trade a continuation away from. When I look off the lows, there are failure swings. Same off the highs, there are failure swings. So I'm considering this more of a neutral market. In this condition, I'm going to mark out the external low of that range, the external high of that range, and I'm really looking for one of two things to happen. The first is a manipulation on one side of the external range. After that confirmation, I can say that is a point of reversal that I can trade away from. I'm looking for that expansion to take place to the opposing side of the range, and along the way, that's where I'm framing my continuation entries. If the market fails to manipulate and remains internal, then I have to use the weekly profile as a gauge on my bias to determine a point of reversal, but then also the direction that I'm going to trade for that daily candle. With Tuesday's daily candle now on the chart, I have a much better perspective on how to approach this range. Obviously, it failed to manipulate this external low and traded higher. That means we're in that second scenario where I'm using the weekly profile to get an understanding of where to trade next as it remains internal. Tuesday is also not a day that I would be participating in because it fails to manipulate this external low of the range. Intraday on these lower time frames, it's no better than playing a guessing game on which of these internal lows should be ran out to then turn higher if it's not this external low. So if it's going to remain internal, I want to be demanding a higher time frame confirmation, a higher time frame narrative to actually begin trading in the other direction away from these failure swings. And that's what's being provided by this Monday and Tuesday candle. And you're getting an even better perspective of this on NQ. So we're going to move over there now. On NQ, we have the same framework where it fails to manipulate this external low of the range before turning higher. But here we can see confluence to the idea that I can begin trading this to the upside with the opposing side of the range as a draw. The first is that we have alignment with a weekly profile. Monday makes an opposing run. Tuesday reverses to then expand in the other direction. That calls for a Wednesday continuation. The other is that we have a Tuesday closure above this Monday down close candle. One that validates this low as a point of reversal, and I no longer need to concern these failure swings. But the other is that I can draw out this price level and use that to frame the continuation on the following day, which we're going to get to on this next step. And just quickly before we get into that, I know what you're probably thinking, but AM, you don't trade the day before high impact news and there was CPI on Thursday. Why are you even considering Wednesday in the first place for a trade? And I'll share a clip from my live stream this past Sunday, a new detail on my protocol around the economic calendar, which I haven't shared before. Obviously, you're looking at high impact news events. There's CPI on Thursday. This is one of those examples where I'm not going to be waiting for the high impact news event in the week. I would be open. It's the same thing when there's CPI on Wednesday. I'm still potentially open to a trade on the day prior. Same thing here when there's CPI on Thursday. I would be open to a potential on Wednesday, just with slightly added caution. FOMC meeting minutes, 2 o'clock. Usually that's kind of out of the scope of relevance for if you're getting on a trade in the morning. Now that the narrative is set on the higher timeframes for the actual continuation day to take place, all of the hard work is already done. This is where we get into the replicable steps that you can do to frame these continuation trades. Going into the daily open of Wednesday's candle where I'm expecting that continuation to take place, there's only two things that I'm looking for. One is a place for the intraday reversal to form, and the other is a bullish daily profile to confirm this idea to the upside. We already have this daily down close candle annotated on the chart where I'm expecting that to support price. But even more simple than that, in a continuation, I'm looking for hourly and 30-minute opposing close candles to support price along the way. So when I look left here on the daily open of Wednesday's candle, I'm looking for down close candles. Where can I see that most recently when we've closed above? It's right here, this series. So on the open of this day, I'm looking for that opposing run in the daily range into these down close candles, remaining in respect to that, and then forming that bullish daily profile, which is giving me confirmation. And then I'm taking an entry alongside that, allowing the daily range to develop a little bit more. During New York, I can look back on the overnight session and ask myself, is this daily profile confirming or invalidating my idea to trade this day to the upside? Looking to the left, these opposing close candles on the 30-minute or hourly as well works. Is it still in respect to that? I can say yes, it's holding that low and we traded below the daily open. I'm looking at the point of potential reversal. There is a change in state of delivery at 3 o'clock. That is a confirmed London reversal. And then going into New York, looking back on all of that, I can say we are aligned for a New York continuation where I can look for an entry to get on side to that opposing side of the range, which is acting as a draw for this trade. Skipping just a few candles ahead, I already have my entry signature to put myself on side with the idea and the expectation that it's a New York continuation, and 930 will help bring that expansion to the upside. So this is where I took my first position with my stop loss at that low here. Not long after, the market removed me from that position, running out that low where I had my stop loss, and I was expecting the market to hold through the open. Sometimes that is the risk you take trading around 930, but most of the time it's going to be in your favor. At this point, I really have a question I have to ask myself. Does that fully invalidate this day and my idea to the upside, or do I have room to reposition myself? Moving over to ES, at the same point, NQ made that lower low and removed me from my initial position. ES made a higher low, respected that down close candle following the open. That is a point where I can say, now I can recognize relative strength in ES. This is where I truly want to be positioned. Everything is still valid from my initial idea, and I reposition myself in this stop loss at that low. And now anything beyond this point is simply trade management to get to that opposing draw of that other side of the range. After reassessing and repositioning on ES here, this low remained intact in the market, and this expansion took place following that from that expectation we set on the narrative from the daily time frame of this continuation move to the external high of that range. Moving back out to the daily time frame, you can see the follow through on this idea. Monday and Tuesday remaining ranged internally, but we have the narrative for a continuation on Wednesday. That trades to the upside in an expansion. That's the nice price moves we like to see in a continuation up to that external high of the range, which is acting as a draw and a main objective for that trade. With that all covered, that is the basis of how I frame my continuation trades. But to quickly recap, I just want to go over the 3 things that you want to be doing. The first is setting the narrative on the higher time frames. You need that to get the continuation, because without that, it doesn't work. However you arrive at that in any context, in any approach, you need the narrative. The second step is you need a 30-minute or an hourly opposing close candle along the way in that continuation. The reversal is formed. After that, you're expecting continuation to a draw you've established. Look at 30-minute and 1 hour opposing close candles and frame the intraday reversal on the continuation day you're trading. The third and final thing you need is a confirmation of the daily profile that is going to align with those previous steps and confirm your idea and give you framework and a baseline to work off of for your entry on the trades. So that is everything I have for this video. I really do hope you found it helpful, and I will see you in the next one.